Hi there everyone and welcome to a brand new video. This is Accounting&TaxSOS where we cover everything accounting and tax. My name is Christopher Cox and in this video we are covering capitalizing acquisition cost and making it simple for you guys to understand if you don't already. So if you guys watched my last video, that was a tax video. Today we are going to focus on accounting. So let's go ahead and get started. Alright guys, here we are with our sample scenario. It looks pretty long, but I promise it's not that bad. Real quick, I went ahead and typed this out so you guys could look back at the information and see it clearly instead of seeing my handwriting. But I did write out a little bit of stuff here, just a little bit of information that hopefully you won't have any trouble reading. So let's go ahead and jump into this scenario. It says here, starting at the top, Franco Corp entered into a $3.5 million fixed price contract with Paolo LLC on March 1st, 2018 for the construction of a office building on land site 11. The building was completed and occupied on September 30th, 2019. And it says here, these are the construction costs that were incurred. Moving on to the bottom, to finance the construction cost, Franco Corp borrowed $3.5 million on March 1st, 2018. The loan is payable in 10 annual installments of $350,000 plus interest at a rate of 12%. Franco Corp, the average amounts of accumulated building construction expenditures are as followed. These are the average construction expenditures for 2018, and then at the bottom for 2019. So it's asking one question here, and there's multiple parts, but they are all very simple. So let's go ahead and knock this out. Okay, so the one and only question or statement that is made here that you need to do is prepare a schedule for individual costs that need to be capitalized for the office building account. So office building, so this is the office building account. I'm going to go ahead and draw that out real quick right here. And that is what is being constructed, is the office building. So this is the office building account for everything that needs to be capitalized. So we are first going to start out with the contract cost. I'm gonna kind of abbreviate a couple things because we're gonna run out of room. So this is contract cost abbreviated, and that is just listed right up here. 3.5 million, so $3,500,000 for the contract cost. And then below that, we're going to do the plans and specifications and blueprints. I'm just going to write plans for that one for room reasons, like I said before. So that is $17,000. And then below that we're going to do architecture fees, which is, this is given in the problem, so you don't have to do any type of calculation to figure that out. So I'm just going to write design, and this is for design, supervision, and the architecture fees. I should have wrote fees, but that's fine. We'll go ahead and write $89,000 here. 89,000. Okay, so now we're getting into the capitalization of interest part. So I'm going to write CAPINT for capitalization of interest for 2018. So right now you're going to have to do a little bit of calculation to figure this out. But if you guys watched my earlier videos, a couple of those dealt with when to incur interest. And so this is going to look a little familiar for you guys. So 950,000, we're going to do this one because it says 2018. For this is the capitalization interest for 2018. So $950,000. And first we're going to write the interest rate, which is 12%, and we're going to reduce that to decimal. And then we're going to multiply by the months. And if you guys remember, I like to draw things out because it helps me. So 3, 4, 5, 6, 7, 8, 10, 11, and 12, representing December. So these are months, and Jan for number 1. Okay, so that goes all the way from January to December, all inclusive for the months. So if we look right here, because this is the only one we're looking at right now, we are not focused on this one because this is 2019. So right here it says March 1st. So we go here to March, and then notice it says the first of the month and not the last part of the month. So in that case, you will include March. You will not include January or February. So you will count March, April, May, June, July, August, September, October, November, and December. If you accumulate those months that are counted, you will get 10. So 10 months, and then you are going to divide out of the 12-month period in a year, and you will get $95,000. And that is your answer. Their answer for capitalized interest for 2018 is $95,000. So the cap interest for 2019, you just do it the same exact way. So what you're going to do is, you'll notice here it says January 1st to September 30th. So you have January, February, March, April, May, June, July, August, and September. You accumulate these months and you will get 9. Let's just go ahead and do that right here. So multiplied by 0.12, which is the interest right here. Then you take your months, 9 divided by 12, and you will get $229,500. Hopefully you guys can read this as a 9. And you're going to go ahead and put that in this table right here, $229,500. And to get a total, obviously you just add up all these numbers and you will get a total of $3,930,500. And that is how to capitalize interest on borrowed funds. Hope you guys really enjoyed this video. It was quick, simple, but hopefully you guys learned a lot. If you guys want me to focus more on capitalizing interest and different ways to capitalize, and maybe why you need to capitalize interest, go ahead and let me know, and I'll be sure and make that my next video topic. So thank you guys so much for watching, and I'll catch you in the next video.